Hey everyone, welcome back to Corporate Decoder, the place where we take apart the confusing world of corporate filings. Today we are diving into a proxy statement, which honestly sounds like something out of a spy movie, but don't worry, no need to adjust your glasses. This one is from FB Financial Corporation, and we are going to see what's on the agenda for their annual shareholder meeting. We are looking at things like who gets to be on the board, how much the top executives get paid, and a few other important decisions they want their shareholders to weigh in on. Let's get started and find out what's really going on. So it's almost time for the annual shareholder meeting. Mark your calendars for May 22nd, 2025 in Nashville. But most importantly, you can attend online, so no need to travel. The main things up for a vote are electing the board of directors, voting on executive pay, and getting rid of some rules that need a super high percentage of votes to pass. More on that later. This document is how they are telling you everything you need to know before you cast your vote. First up, let's talk about who they want on the board. There are 12 people up for election. Directors are like the guardians of the company. They are the ones making the big decisions and keeping an eye on management. We've got bankers, healthcare executives, community leaders, and real estate pros. It sounds like a diverse group. They want you to vote for all of them. John Ayers is one of the nominees. He has been a director since 2017 and has a long history with First Bank, having worked there for over 30 years. He has a broad experience in different industries, which makes him a qualified member. William Carpenter, also known as Bill, he is the chair of the board and has been a director since 2020. He is an accomplished healthcare executive and was the CEO and chairman of LifePoint Health is an asset. Eugenia Clark is another nominee and has served as a director since 2017. She is currently the president of Fisk University, a historically black college and university. She also was the CEO of the Girl Scout Council of Middle Tennessee. The report mentions that most of the director nominees are independent. That's a good thing. It means they are not too closely tied to the company's management and can provide unbiased oversight. The board has determined that with the exception of J. Jonathan Ayers and Christopher T. Holmes, each of our director nominees are independent directors. It is a peek into who really controls the company and how aligned management is with shareholders. The biggest individual shareholder is James Ayers, owning 23.3% of the company. That is a significant stake. Then you have got the big institutional investors like BlackRock owning almost 14% and T. Rowe Price owning almost 10%. The Vanguard Group owns a bit over 5%. These big firms have a lot of influence because of the amount of shares they hold. Here are the names and titles of the top dogs. Christopher Holmes is the president and CEO. Michael Mittee is the chief financial officer, and then there are a few other chiefs in charge of banking, risk, human resources, innovations, and operations. Now for the part everyone is always curious about, how much do the executives make? The goal of this section is to explain how they decide what to pay the top executives. You will see phrases like compensation committee and NEOs or named executive officers. In this section, they are looking at things like how well the company performed, what other similar companies pay their executives, and trying to make sure they are rewarding good performance. In 2024, there were a few achievements such as a 13% increase in adjusted EPS, a 20% increase in pre-tax, pre-provision net revenue, and the shareholders got a return of 31.4%, which was better than most of their peer group. All these numbers are trying to say things went pretty well for FB Financial last year and that the leaders did a good job. They're also going to talk about the different parts of the executive compensation package. There is the base salary, which is the guaranteed amount they get paid regardless of performance. Then there are the bonuses and the stock options, which are tied to how well the company does. Christopher Holmes, the CEO, got a base salary of $75,000. Michael Mittee, the CFO, got $450,000 on $75,000 in 2024. The Michael Mittee, the CFO, got $450,000 in 2024. Michael Mittee, the CFO, got $450,000, Alf Akin $40,000, and the other top executives made somewhere in that ballpark. They do increase depending on their position of responsibilities. For example, R. Wade Peary led a project to identify opportunities for the company's manufactured housing division, developed technology roadmap, and is responsible for artificial intelligence strategy. The document lays out all of these details if a company take over or if an executive is fired. This section caps the amount of money the executives will receive in order to prevent it from being too high. They are trying to avoid giving executives a reason to sell the company just to get a big payout. They want to make it easier to make changes to their governing documents. Right now, some things need 80% of the vote to pass, but they want to bring it down to a simple majority. They say it's about modernizing their governance and making the company more flexible, but it also means it will be easier for someone to potentially take control or make big changes down the road. Last but not least, they want you to approve their choice of Crow as their independent auditor for next year. These are the guys who check the company's books to make sure everything is on the level. It is a standard procedure. Audit Committee has a policy to pre-approve all audit and non-audit services done by Crow. All fees paid to them were pre-approved. Delinquent Section 16 at Port and Port mentions that all Section 16 ATS filing requirements applicable to our officers, directors, and 10% beneficial owners have been complied with for the fiscal year ended December 31, 2024, with the exceptions of 5 tax withholding transactions related to the vesting of restricted stock units by Mr. Edmondson, Ms. Hamilton, Mr. Peary, Mr. Pennington, and Ms. Sims, which were not timely disclosed on Form 44. Now, taking a step back to look at the big picture, FB Financial seems to be in a pretty solid position. They're profitable, growing, and have a well-diversified board. One thing I am keeping an eye on is those supermajority voting rules. While it's good to see companies modernize their governance, it also opens the door for potential changes down the line that might not always be shareholder friendly. And as always, it's essential to remember that this is just a snapshot in time. Overall, they are following good corporate governance standards, which gives me confidence in this company. Although you must do your own due diligence for any investments. Thanks for watching. If you found this breakdown helpful, give us a thumbs up, leave a comment, and do not forget to subscribe for more corporate deep dives.